Good morning, Alex. Something bad happened at the house that you smelled as rat? Good morning. Good to start the day with a little humor. All right. Good morning, YouTube. Sorry we missed you guys yesterday. There was YouTube having a bit of a hiccup first thing in the week. Anyway, so markets kind of weird yesterday, right? The way it was kind of hanging out there, and at the end of the day, there was this breakout, and then it was like half the world was waiting to unload. Whoever that was, but like that breakout occurred, and then the markets just dropped pretty hard, and we got this topping tail red bar on the futures here, and you can see they're backing off here this morning. The Nasdaq's going in the other way. We'll get to it, but you can see how it's starting to roll. As always, we don't know where this day is going to end. It could be right here at the end of the day. Who knows? Up, down, whatever. So markets get a little extended. We started talking about increases in momentum here, which was different from the sideways kind of churning higher here. And then as momentum picks up, typically get closer to some kind of corrective action. It doesn't mean it's going to end. We had the topping tail bar here, and that corrected sideways instead of pulling back, so it was still bullish. And we got the correction bar here, and you could notice the angle that prices went up at after that. So as we're reading what's happening here, and you know me, I got to show you how it happens with prices so you don't have to look at indicators, but you can look at the angle of ascent here, and you don't have to look at any whatever down here, right? But you can see the angle of ascent here is sharper. And of course, look at the angle of ascent here that occurred yesterday. So that's one concept that we use to read charts without indicators, to see what is going on. What do others believe? What are they thinking? Right now, an angle of ascent, which is pretty much vertical on a 60-minute chart, strongly suggests it's going to pull back. Now, of course, we take a look at how long has it been going up? Did it just start the move, or has this been going up for a while and then went vertical? The same way here, starting from the left side of the chart, starting the move sideways, up, side, gets a little stronger in the rally, sideways, and obviously gets stronger. So there should be buyers on a pullback when a pattern like this, but it depends on how far it pulls back. So if it was to pull back all the way to here, of course, we're going to recognize that as a sign of weakness. So that would be a deep retracement from the major support to what might be a high point. And we have to see, just a red bar doesn't change the trend, of course. So, but if this was to pull back, well, then by the end of the week, we're going to have a red bar here. And then you all know what that's going to look like if we were to get a red bar here after prices have been going up, and then a range expansion bar, and then a red bar that engulfs and maybe closes near the low, suggests that deeper pullback, which, we kind of been talking a little bit about September. We're starting, looking at September and the worst month of the year historically, and some months it's not. We don't always have things go exactly the same way, of course. Anyway, the way things have moved here, maybe September is going to be a bad month. We've kind of got the pattern here that would support that, but we'll see where the rest of this week goes. But you can see right now, momentum is slowing and some profit taking is going on. And even, right now, you can see the vertical move to the downside that's occurring on the 5-minute chart. So we look to the left and notice the overlapping opens and closes there. And then, of course, the pivot low. And then, well, there's another pivot low, and there's this congestion over here, which would tell us that this area here should be a pretty potent reference point of price support. Now, as I'm looking at this and talking to you, I'm saying, well, okay, all of that. If it comes down here, maybe I want to be a buyer. But you know what? Based on this daily chart being a little extended with this momentum move, maybe this head and shoulders kind of top here is beginning to form, which prices then break here and head somewhere down here. So something to keep in mind that, maybe, today's the beginning of the day on Tuesday, of course. You've got all week. Things can happen, but this pattern is starting to shape up. So I want to keep that in mind. As an intraday trader, if this was to fall down here into 10 o'clock reversal period or 10:30, I would still be looking for an intraday scalp and then see what's going on. And Alex is reminding me ISM is coming out at 10 o'clock. So if that is well under 50, bearish. If it's a good number, which seems kind of unlikely with, all this, jobless claims going up and GDP, the worst ever, and so on and so forth. But yet we've got these companies coming out with earnings that beat the earnings, top. Right? Pretty crazy times we're in here. So keeping a thought about 10 o'clock and things lining up and whatever. That's what we do. We put together information that we know is available. We look at the charts. We look at the trends in multiple time frames. We look at support and resistance, and we come to some conclusions that provide us a bias. Okay, let's clean this up. And we have the NASDAQ, which I can see the number getting lower. It's coming in here a little bit. So you probably all know, Zoom is zooming, going up. And so the same type of acceleration. And this potentially here, right? In the letter this weekend, I talked about the potential of this week, maybe this accelerating higher to put in a high where it got more extended. Now, maybe that's going to happen. So as I look at this, and you can see the way this went up and the wide range bar, that would suggest a slowing in momentum and possibly the end of the move. But it went sideways for 2 days, which was bullish. And it went sideways at the top of the wide range bar, well, bullish, and we've got a little bottoming tail bar there. So those are buyers on the dip. And then it moves up yesterday. Not significantly, but a green bar, a little tail. And when I look at something like that, I get a little suspicious because even though this is a little extended, it had 2 days to rest. So why the back off? But, there was that back off yesterday on the failed breakout. So this now is going to make this, while it's not a pivot, this is going to make this initially, even this, a significant reference point of price support. So let's see where that is on the hourly chart. Way down here. So that could pull back quite a bit where it would have to get through these levels. And I'm saying this is significant because, well, this shouldn't even pull back. In reality, it shouldn't even pull back, under these bodies because it rested here. It should continue to go up. And the hourly is in an uptrend. This little pullback really doesn't mean very much. But you've got quite a bit of support here. So this was that resting period. So you could see why if this comes all the way back down here, that could be a problem, meaning deeper pullback. So we got to keep an eye on this, as we always do, as to, different markets, how much they pull back, relative strength, relative weakness, and so on. Now, the Dow is down 100 and something. It's been the weaker right along, and while it started to outperform last week a bit, right away it's given it back. And, the thinking going into this week, my thinking anyway, was, the prices could continue to higher. Maybe they will yet, but, that the Dow would make a new all-time high. The other markets would go up. Breadth, which has been just terrible in the market because it's all about technology, stocks, and internet, would then move up to a bearish level, and we'd have everything in alignment, for a September correction. And anyway, this is beginning to pull back. We've got this support here, which if we do this and just apply it there, you can see it's right there, right here, or right. Maybe comes down a little bit more. You can see where I'm making a mess there, but this little overlapping bars right there is where the support is. And so we'll see how far this gets and where it might want to pull back from. And the Russell, I was kind of counting on this money. Making a little joke here, but looking at this pattern, where's my Russell? I thought I had it in here. IWM. You could see, the pullback here, and just how this was shaping up on the pullback, the break under here, and then the bottoming tail bar on Friday, and then it just couldn't get going. So, it's messy. If by chance, boy, if today could turn into a green bar closing at the high, for me, I think that's a signal to press the accelerator that this is going to go up. It doesn't look like that's going to happen at the moment, but 4 o'clock is a long ways off. But if we were to get a solid green bar today closing at the high, that is going to be a strong signal that it better work and go higher, because historically that's what happens. And that's what we do as chart readers. We look at patterns that we recognize from the past, and we place trades based on the probability of the pattern following through. So this bottoming tail bar, in the context of this, was supposed to follow through yesterday, and it didn't. Well, that's been the MO of this market, and the breadth and the thin breadth that there's been with technology going up, and most things just kind of lagging. So bonds coming down to the next pivot low here, and we have that sell set up there, and this move lower, which is kind of odd that it's gapping down like that. But anyway, maybe it's because I've got this on a continuous chart. But anyway, it's down at the next pivot low. There's a void below here. So this is going down, which means interest rates are going up, which isn't a bad thing. But, more interest rates go up, and this is relatively low still. The more interest rates go up, the more it's going to become competition for equities, which could then lead into eventually, interest rates reasonably higher level, which I guess they're pretty far from that. But just the point of interest rates going up here, it kind of puts in question, equities and a correction that's overdue, possibly on its way. And oil just continues to be in this coma-like trading. Breakdown failure, breakout failure, sideways overlapping bars, which communicates a lot of uncertainty. So basically stay away. Gold starting to perk up, repairing the damage here. Probably worth putting on a small position, in GLD, or, trading the futures here. I do recognize, of course, that resistance is right there that it's going to have to deal with, and why I say small. It's got that resistance, and you got to give these things wiggle room, but, it looks interesting. What I'd really like to see here, and it's in opposition of what I'm saying, but, this has created this double bottom here now. So if this breaks, it's probably coming down here. I'm not saying that that's going to happen. This daily chart is supportive of, once it gets here, chopping around and then going higher. But, the weekly chart is one in which it typically does this, and then sets up a much bigger move. So I'm not so sure. That's why, you have to say if you small position might be interesting anyway, even for day trades up into this level. And I have to clear that. And silver coming up to the high again. So, when you see things come down this hard, that fast, it's unusual to see it recover that quickly. Usually it would come down lower, but obviously buyers are aggressive here for gold and silver to be able to come back after such a giant red bar like that. So $30 again, maybe it gets through it this time. And the laggards, the transports, just right up here. I mean, right at the goal line, right, to make a new all-time high. Well, I guess it's close to the goal line, up here, but it's just hanging up there. So all these markets, you can see the angle of ascent here up into here. So a lot of things saying that the market should pull back here a little bit. Kind of hoping myself that it might make one more push up. So we'll see what happens here later today. All yours, Dan.
Good morning. Yeah, I wasn't watching the news, so I don't know what caused this little pre-market sell-off, nor do I care. But woke up again, saw the market up. Other than diamonds, were the weakest. So all our opens look fine. Number of things just down pennies, up pennies. The biggest one up in my watch, the coup here, which we found into the close yesterday. So I put this on my list. Beautiful 1, 2, 3 here. And the gap might be messing it up, but that looks fantastic. I have that in a separate window. YouTube's asking about dunking pin dish. Oh yeah, dish. You know what? When I said things up pennies, it's showing dish 0, but yeah, I saw it down too. So I wonder if my other computer is not accurately showing pre-market prints. But I'll get to it. Hold on. Dunking. We had a put spread on this wide range breakout bar. And you know what, Greg? We stopped out. And I was thinking to myself, yes, it negated that big wide range bar, but it's right here in support. And, I felt bad taking a stop. And I was thinking that might have been one. Because of this support, we just sit through it and roll it. But as a new trade, no, I'm not crazy about it. Maybe a day trade if it sets up.
Well, Dan, I've missed plenty of trades over the years by waiting for something else to set up after a wide range bar rather than just entering small positions and putting a stop under the wide range bar.
That's what we did.
Right. So now you got this pullback into support, and
Right.
it shouldn't violate the wide range bar, but having a stop there, I mean, it's just inevitable. I say inevitable, not that it has to happen. You always got to say give that disclaimer, but it's likely to stabilize there. And you could get out at a better place. So, just having a stop at support, it's usually on a break of support, but as something retraces as far as that did there, I typically am going to refrain from stopping out and waiting to see what's going to happen. And so there's always the choice of exiting half because it just doesn't make sense to exit at support. Now, I wouldn't buy it there because of the deep retracement, but to exit there, it's kind of like mini climactic point already where it's reached support where, it's likely to stabilize.
Right. And so that's why I'm bringing it up as a discussion that in terms of trade review, I'm looking at it saying we shouldn't have taken the stop. But once it made a new high, you know, this was gap down recovery. I sure didn't think that would happen. All right, let's continue here. Deepak's asking about Daku call options. No, it's gapping up 20 something points. If you were in it yesterday, I'd be selling half at the open. It's 30-minute low on the back half, but no, we don't chase the big old gaps like that. Let's see. So Dish, yeah, Dish. See, that's why my other computer showed it flat, because it is flat. It had an ugly pre-market. I see that. And we actually bought it on the gap breakout yesterday. It had a beautiful intraday setup also. And I think McGraw told us the reason it was so strong was, I don't know, takeover rumor. I don't know. It was in the news. That's all I care about. And you know, I guess news came to reality, and it's sinking in. Someone asked about Penn. It's in my list over here also, 53.35. There's no great price void, because if you notice here, it's a bullish gap relative to the depth into yesterday. But look at this wall of resistance. So there's no compelling setup there at all. Square. Yeah, Square looks good. Yep. It's a $5 gap though. $5 plus, so that's the only problem, but that's a bullish chart. Tomorrow we're going to be talking about MT live trend and trend strength, and you know, I could show you 1,000 charts. I mean, this one too. We could spend the whole show talking about this chart. But that's incredible strength. I mean, we can talk about everything, the pivots, the distances, the red bars ignored, the consolidation over time. Here's red bar ignored. Here's a little triangle pattern right here. This was sloppy consolidation, but still in an uptrend. Now it's gapping all-time highs. It's incredible strength, incredible. I also made a mention last week when I saw MA and Visa. Look at that incredible move last week. This is what we call a 180 reversal. Wide range bar followed by a negation of that wide range bar. So this I'm going to put on my list for a bear call credit spread for Friday. Hint, McGraw, you can put that on your to-do list. Look, these things are identical. So both of these are bear call credit spread candidates for Friday. They look great. I'm going to put it in a list myself. Not in a list, in a thumbnail on my other computer. Someone's saying Shill should be a good short. No, I disagree with Shill being a good short. It's a bullish consolidation in the upper half of this wide range bar. So that is bullish consolidation. That's not a short. All right, let me continue with my gappers here. Papa Delta, big old gap breakout, but we don't buy breakouts that run from the bottom of the list to the top here and then gap up. That's more of a short-term exhaustion. Look at Kodak Black, I call them. Look at that crazy move. This was the one. Kodak is literally Eastman Kodak, the old Dow, you know, photograph. And then they decided they were going to start making vaccines or something. I don't know. They got some contract with the government, came back to Earth. So that's a gap where I want to keep an eye on. I have it here on the bottom right. Look at this Zoom. You know, we all, I mean, wasn't it unanimous yesterday where we all said, yeah, of course they're going to have good earnings? You know, I mean, I would have loved to see it to gap down to 300, which the only reason it would do that is if the street's bullish reaction was expecting better earnings than reported. But yesterday's bar surely told me that there could have been not, you know, there's some speculation into earnings, but you don't buy into earnings like this, making an all-time high without some high degree of confidence. You think it's going up. Hint, hint. Do you think there could have been a leak? A leak, maybe? Do you think that ever happens, William? Starbucks gap long? No, 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 no. We don't buy cat. Look, this thing ran from 77 bucks to 85. It's up a little bit. You know, maybe you get a day trade, but there's no support here, and it's far from the 20. These are not long candidates. I mean, compare that to coup. Coup is superior daily setup because it's a bullish 1, 2, 3, 4. You got the bottoming tail triggered under these two bars, and now it's gap. It's a gap breakout, bullish weekly. This is a beautiful pattern. The only thing I wish better is it wasn't gapping too much. You know, more it gaps, just the harder it is. This thing, I think, had earnings, SCSC, bearish, not much volume, but it looks like a bearish gap. RXT, hey, recent IPO. Now, the gap yesterday messed it up, but that was a beautiful, beautiful close on Monday with a bullish engulfing right here. That would have been, I don't know what made it gap up yesterday. But that I would have confidently held that overnight. That was a nice close. Walmart, there was some news that they're trying to compete with Amazon on their, you know, Prime delivery thing, whatever it's called. BBW, a big old gap up here. That's a bottoming pattern. Look at the weekly. Weekly has room to $4, but it's too extended on the daily. You know, Zoom, Tesla, all these things going to the moon, they will run out of steam. You just got to get the setup. I mean, Tesla, I mean, it's still, that's a bullish bar yesterday. Is it extended? Yes. But is it time to short? No. Look at this monthly bar. Alex, you and I were talking about wide range endings on whatever stock it was. That's a that looks like a wide range ending bar. I mean, good luck if you're buying up here. Good luck. Not our style. I mean, but it's okay if you have a beautiful setup on the daily and or intraday. But I personally, I'd rather kind of just chill out and wait for short. Look at Boeing week again. Boeing was keeping a lid on the jets yesterday. I see all markets still sputtering. Like jets, yeah, jets are still having trouble. Good thing we got out of our RCL put spread yesterday at a nice profit. We're still in a covered call, but trailing stops where we're locking in profits. Let's see, we did a T2 call spread, and yeah, we just need the clock to tick away. And we also did Well, shock, we actually took our money. We had a put spread, it went against us and we still made money, but let's keep this on the list for a new put spread. All right, I got some more questions here. So let's see, we got those three, and then someone's asking about target. Target is neutral. It's still extended. It's still far from support. You got a wide range ending on the weekly. It cracked 1, 2, 3, 4, 5 bars of consolidation, and it's just going sideways again. So I got no opinion on target for a new trade. KBR gap down, so it's possible breakout failure. I got no interest. KHC is breaking down. It had this breakout failure. That's a total mess. Have no interest. HHC, same. A breakout failure, 180 reversal and getting slammed with a bearish 15-minute chart. So I got no interest in those. Glancing at my opens. We also did a workday out of the money call spread yesterday. We just needed to tick away into Friday. Spiders, see yesterday.